Good evening. This is Ken Long from Tortoise Capital with a review of the daily trading plan for Monday, August 7th, 2017. Market remains in bullish quiet mode. On an annual and a 10-day basis, it's deeply overbought at 100 and 100 using the NDX 260 and the NDX 10. Looking at the market mosaic, price with respect to the 200-day moving average improved slightly to green bullish 6.34%. The risk index, the 30 period moving average of the VIX divided by the 10, comes in at 1.028, so we are still in risk on conditions because we are greater than 1. The Z score of that rating compared to the last 5,000 trading days is 0.21, so it got slightly lower. You can see a 90-day histogram of that indicator. We're still approaching the zero line, and so the risk of a downside volatility shock continues to be present. So we should be monitoring our stops on positive swing trades very carefully. We should be emphasizing the shorter term trading horizon to take advantage of that kind of volatility spike should it occur. No signals in channeling an overreaction. A handful of ETFs fired on swing trades today in the XL series. Mexico looks promising on a swing trade basis for 551W and triple screen. Only metals and mining and DuPont fired on the auto framer today. There were some gap ups and then significant sell-offs in that sector, and so Caterpillar, Alcoa, DuPont, and XME will bear watching for signs of weakness. Merck and McDonald's out of the large caps fired on triple screen and 551W, so we'll be looking for some perhaps mechanical entries on those. Lots of dojis today in the Dow 30. Only a couple auto framers fired. The market itself is in a doji condition near the top of its 10-day trading range, and so that makes it vulnerable to either those sudden sharp breakdowns, could be $3 or $4 down to the Bollinger Band mean or the bottom of the river, but could also be poised for breakout. So I'm expecting, again, sharp moves from this critical state in the near future. In the ETF 30, a few dojis, a couple washout patterns in consumer staples and consumer discretionary that I'll be investigating. 551Ws in healthcare, Mexico, and U.S. real estate. Metals and mining tests out well on the auto framer, the only one in the stack to do so. Oops. Oh, shoot. So in the pinch and stretch report, we have in column 1 the most positive Z stretches. We have half a dozen symbols that are outside of their river, so above the Bollinger Band mean at +1, led by Verizon and Boeing and Walmart and Apple. Apple broke my heart today, so we'll try to get our money back on Apple. Thanks, Sally. The most negative Z stretch, only IBM is in the red at -1.06. It's the only member of the Dow 30 or ETF 30 that has fallen out of the river to the downside. That was a big winner on the short side today, both in as a mechanical entry and as a hybrid frog entry. And so we'll be watching closely to see if that weakness continues. If so, it would be a very high priority target for short side, especially if the market and or tech gets weak. We'll be looking for IBM to lead the way further downward. Column 3, we're looking at the symbols that have the widest rivers. You get a wide river after a strong directional move. And so Boeing and Verizon have had strong directional moves to the upside. IBM, strong directional move to the downside. Those with the most compressed pinch box means the river is very narrow. These are likely to be poised for breakouts from Z3P or super pinch conditions. That would be Pfizer, ExxonMobil, McDonald's, Goldman Sachs are on that list. In terms of the super pinch, we have four candidates today, and that's ExxonMobil, the S&P 500 Industrials, XLI, Pfizer, PFE, and Healthcare, XLV. So with these as super pinches, the logic chain would be if the market is up or down big, if healthcare is doing much better or much worse than that market in the same condition, we would then look to see if Pfizer is leading the way um, for healthcare. And so that would get us to the super pinch candidates in a hurry. So ExxonMobil, XLI, Pfizer, and healthcare. So plenty of things to work on that are continuation patterns for today and some swing setups to look at for tomorrow. And other than that, we're going to keep our risk measured and powder dry as we prepare for tomorrow's trade. So thanks for your kind attention. Take good care.